we have with us our guest of honor, Vice Chairman and CEO of HDFC, Mr. Keki Mistry, sir. Respected Director, Professor Manoj K. Tiwari, sir. Respected Dean of Student Affairs, Professor Rauf Iqbal, sir. Honorable faculty members, officers, and staff of NITIE, and student participants across the nation. With much pride and elation, I welcome you all to the NITIE Prerana Leadership Talk, a platform where we invite eminent personalities with rich life stories to inspire the next generation of business leaders. This year, we feel immensely fortunate to have with us Mr. Keki Mistry, the person leading India's premium housing finance company, HDFC. Rolling back the years to 1975, Mr. Mistry began his career with A.F. Ferguson & Co., a renowned chartered accountancy firm, followed by short stints with Hindustan Unilever Limited and Indian Hotel Company Limited. In 1981, Mr. Mistry joined HDFC Limited and rose up the ranks. His strategic vision led to his eventual induction on the HDFC board as an executive director. As the CEO and vice chairman, he is now the key man in HDFC, looking after a gamut of functions and providing leadership to the group. As a part of management team, Mr. Mistry has played a critical role in successful transformation of HDFC into India's leading financial service conglomerate by facilitating the formation of companies including HDFC Bank, HDFC Asset Management Company, HDFC Life Insurance, and HDFC Ergo General Insurance Company. So, it is truly an honor for us to host you to the NITIE platform. NITIE, the National Institute of Industrial Engineering, was established in 1963 with the aim to generate solutions to the problems of an exponentially increasing industrial order and to upskill the next generation of techno managers. I would now request our respected director, Professor Manoj K. Tiwari, sir, to welcome our guest of honor.
Yes, I'm audible, Vedant?
Yes, sir. Yes.
So let me express my profound regards and privilege to Mr. Keki Mistry, who is one of the leading expert and you can say have a plenty of grip over the financial market and the way in which Mr. Keki Mistry has transformed the HDFC Limited is now a well-known story in the corporate world. And sir, we are very lucky to have you with our platform at NITIE, an institute which is on the journey of transforming its current way of doing business to in education. And our record to help the industry by producing top-class graduates, sir, is well known in India and abroad. So with this note, sir, I can say the kind of experience and expertise you are having, it will be widely acknowledged and admired by our whole faculty and students community. So we are really welcoming you from our core of heart. And sir, this floor is now yours as per the programs devised by Vedant. And we are lucky enough, and thank you very much for coming to our platform. Mr. Keki Mistry. Namaskar. Yes.
Thank you very much for those kind words. Let me start the session. And first of all, a very good afternoon to all of you. Thank you very much for inviting me, and it is indeed a great pleasure to speak to all of you today. NITIE is a very well-regarded and reputed university and has developed an excellent reputation over the years by imparting the highest possible standards of education. Importantly, your institute inculcates management skills for students who want a career in industry, manufacturing, supply chain, and leadership, all of which are a critical need, as we all know, for India. India, as you know, aims to be a self-reliant manufacturing hub, and NITIE will play an important role in achieving that objective. NITIE has been commended for creating a practical-based curriculum and courses related to logistics and supply chain management. I understand that NITIE has developed transformative and industry-inspired research, thereby assisting Indian enterprises in expanding their global presence. Today, I will divide my talk into two parts. I will begin by giving you an overview of HDFC to provide the context to the unique circumstances in which HDFC was established, followed by how we address some of the challenges that came upon us at a very early stage. In the final section, I will give you a quick summary of some of the principles which have helped me throughout my life. And I usually try to do this when I talk to students because it's just something which I've learned and I think it is something people can benefit from. So let me first start with the HDFC part. I joined HDFC 41 years ago, so it seems a very long time, and have over the years intermittently seen several periods of both very high optimism and equally high pessimism in the economy. HDFC was established in 1977 as India's first retail housing finance company. Till that time, retail mortgage finance in India was unknown. There was considerable skepticism in the initial years surrounding HDFC's formation, as firstly, no one had endeavored to provide retail finance to individuals in India before. Secondly, at that time, there was no access to long-term funding. And as we all know, housing is a long-term loan, and therefore you need long-term funding to be able to provide that long-term loan. Thirdly, there were no foreclosure laws existing at that point of time. Yet there was a strong case to establish the mortgage finance company because the housing shortage in India was indeed immense. And this fact remains true even today. Due to rapid urbanization, the housing shortage has continued to swell. The shortage was estimated at 29 million units in 2018, up from 19 million units in 2012. Further, mortgage penetration is extremely low and is currently estimated to be at about 11% of the GDP, compared to anything between 20 to 40% in other Southeast Asian countries and over 50% in most of the developed markets. In India, we are just about 11%. In the initial years, we realized that HDFC had to be a customer-centric organization. In fact, customer needs defined all our processes, even the design and layout of our offices. We recognized that the purchase of a house was the single largest investment that a middle-class person would make in his or her lifetime. And because of this, he or she wanted to be 100% certain that the best possible deal was being offered, that the price was right, and that proper legal documentation existed. Hence, value-added services became extremely critical. Our business strategy to start with was based on 4 principles. First and most important was feedback from customers in designing products and systems. Secondly, we believed that word of mouth was the best form of advertising, and there was no need to spend very large sums of money on advertising or brand creation. Thirdly, we adopted a learning by doing philosophy, as there was no model for us to emulate. And fourthly, we invested a lot of time and effort and resources in training our staff. Every single employee of HDFC, irrespective of his or her rank, had to go through at least one training program annually, and customer service was always a key subject for discussion in these programs. The biggest challenge for us in the initial years was never about finding lending opportunities. It was primarily about raising resources. Once the capital of rupees 10 crores was exhausted, the challenge was in raising funds to support our disbursement needs. Banks and institutions were reluctant to lend us money as they were skeptical of our ability to recover the money that we had lent. We had our first breakthrough when the International Finance Corporation, IFC as we know, agreed to provide us with a $4 million loan. As it turned out, this was the costliest borrowing that HDFC ever did. The exchange rate at the time when we drew the money was 7 rupees and 96 paisa to a dollar. And when we paid back the loan a few years later, the exchange rate was 17 rupees to a dollar. In those days, there was no sophisticated products to hedge the exchange risk. And all we could do was keep taking 6-monthly forward contracts. The loan ultimately ended up costing us something like 15% plus. But we had no regret as it gave confidence to domestic institutions like LIC and other banks to provide funding to us. There has fortunately been no looking back after that time. Today, HDFC raises resources from a variety of sources and also has a very strong retail deposit franchise. We keep shifting our funding sources across different channels depending on economic conditions and the interest rate environment. Since there were no foreclosure laws before 2002, we built in safeguards by taking third-party guarantees, insurance policies, and post-dated checks as additional security. Importantly, the loan origination team and the recovery team work very closely with each other and not in silos. So there was a constant process of providing feedback to the front line on the kind of issues that the people who are recovering loans were facing. Every organization must at an early stage lay down its primary goals and objectives. We at an early stage laid down 8 objectives that we have strived to achieve year after year. Our first goal was to grow our loan book at a sustained pace that we could set for ourselves every year based on prevailing market conditions. The rationale behind this is that at HDFC, we have always believed that in the lending business, market share by itself can never be a parameter to gauge success. After all, if you're in the business of lending, there will never be a shortage of people who will wish to borrow money, and by sacrificing margins or by diluting lending standards, you can get all the market share you want, but that will never lead to long-term sustained success. Our second goal was to focus on asset quality by creating strong loan appraisal systems and an effective recovery mechanism. Also, we have been very conservative in our provisioning, and we continue to do so. Thirdly, our third objective, I would say, revolved around operational efficiency. We made large investments in IT systems in the early and mid-1980s, at a time when automation was relatively unknown in India. For this purpose, we developed our own software and operating systems. Our focus on operational efficiency has brought about one of the lowest cost-income ratios that you will find in any retail lending institution in Asia, and possibly one of the lowest in the world. Our cost-income ratio for financial year ended March 2022 stood at 8.1%, and our administrative expenses to asset ratio stood at 23 basis points. Our fourth objective revolved around managing the balance sheet. In the financial services business, profits can be enhanced by taking undue risks, particularly on the asset liability management, or by by borrowing short, lending long, and things like that. This, however, creates volatility in earnings, and we have therefore avoided any kind of ALM, as asset liability mismatches at any point of time. Additionally, home loans need to be funded in a manner that ensures a speedy spread for lenders with minimal asset liability mismatches. Sources of funding are important in terms of asset liability management. Since housing loans are long-term in nature, it is important to ensure that the funding source is also of a similar tenure. Otherwise, the lender runs the risk of a severe asset liability mismatch. Consequently, our spreads have remained stable over the years and have remained in the range of between 2.2 and 2.35% for more than a decade now. This brings about consistency and predictability in earnings. Fifthly, we live by the belief that our customers meant everything to us, and therefore we constantly strive to provide them with the best possible service. This was so even in the earlier years when there was no competition and we could have theoretically got away with not so good service. Our sixth objective focuses on culture and employee satisfaction. We have always believed that our staff is the driving force of our success. HDFC was built on the principles of fairness, kindness, efficiency, and effectiveness. We maintain an informal organization structure. This encourages a participative style of management and an open door policy wherein employees, irrespective of their hierarchy, can walk into the offices of any of the senior executives and discuss issues or have their suggestions heard. This keeps the employees motivated, and we believe that only a happy employee can create a satisfied and happy customer. Additionally, stock options have always been granted to each and every employee in the organization. This has ensured a very low attrition rate, as well as it acts as a tool of motivation to employees as they feel responsible for the performance of the company. The seventh objective was to maintain the highest possible standards of ethics, integrity, and governance. We lived by the principle that we should never do anything that would cause us the slightest bit of embarrassment if it ever became public. Our eighth and final objective was to constantly innovate. Policies, procedures, operating systems, products, customer service, risk management systems, marketing techniques, etc., are all facets that need continuous review and innovation. To remain market leaders, there is a continuous need to innovate. After all, what worked very well 5 years ago may not work today, and what works today may not work 5 years later. Later in my talk, I will explain how our endeavor to innovate helped us during the height of COVID-19. As at March 31st, 2022, our market cap of US $57 billion we have cumulatively financed over 9.3 million dwelling units. HDFC is also a holding company, having promoted a number of companies in the financial services sector, thereby creating a financial conglomerate. Over the years, the HDFC Group has emerged as a strong financial conglomerate in the Indian capital markets, with a presence in banking, life insurance, general insurance, asset management, venture capital, and education finance. Listed companies within the HDFC Group had a combined market capitalization of around US $185 billion in March 2022. Although these companies are run independently, we have ensured that the culture of the HDFC brand gets absorbed throughout the group companies. Like all other organizations, we have also faced challenges from time to time. Almost all of these challenges were due to external factors which were not in our control. I would like to elucidate a couple of such examples to show you how we addressed and overcame these challenges. The global financial crisis of 2008-2009 was a singular event that showed us the perils of ignoring risks and the false lure of greed. Complex financial products, which few understood, were created by slicing and dicing, structuring and hedging, originating and distributing products, all under the belief that real value could be created by financial engineering. What was forgotten in the euphoria of those days was that the basic tenet that the financial services sector has no standing of its own. It derives its strengths and resilience from the real economy. Further, when the crisis broke out, it was initially felt that emerging markets were decoupled from the developed countries and that they would remain unaffected from the events unraveling in the Western financial world. But the decoupling theory was soon debunked, given that global financial markets are so interconnected. Emerging economies, including India, were not left unscathed. Following the collapse of Lehman Brothers in October 2008, Indian banks went into a credit freeze, and as confidence in the financial sector got eroded, people became more and more risk averse. This was a global phenomenon. This resulted in a severe liquidity crunch. No doubt, the regulators took swift action to infuse liquidity into the system, but this incident, which shook even the most robust banks and financial institutions globally, was an eye-opener. A key lesson learned was the importance of liquidity and the need to have a judicious mix of wholesale and retail funding. To illustrate that, let me relate to you how HDFC tided through this liquidity crisis. As I mentioned, no one anticipated things could take such a drastic turn and that markets would come to a complete standstill. We believe adaptability is key and that raising resources is a dynamic function. HDFC raises resources from a variety of funding sources, such as bonds, loans from banks and financial institutions, international borrowings, retail term deposits, and so on and so forth. It is important to keep shifting funding sources across different channels, depending on the economic conditions and depending on the interest rate environment. When there is ample liquidity in the system, we tend to tap a little more of wholesale funding, but when liquidity tightens, it is a retail money that we depend upon. In fact, what pulled us through the liquidity crunch of that 2008-2009 period was our retail deposits program, which grew very rapidly. 55% of HDFC's incremental funding during that period came from deposits. Despite the liquidity crunch, we managed to disburse all our commitments to individual borrowers, and this was predominantly due to the retail money that we garnered during the period. After the global financial crisis of 2008-2009, we made a very conscious decision to ensure that deposits need to constitute at least 1/3 of our total borrowings. Though a tad expensive compared to other sources of borrowing, deposit forms a very stable source of funding and is relatively immune to the vagaries of economic conditions. In fact, I would like to go back further and tell you about the critical role that deposits have played for us. During the early 1990s, India was hit by an extremely high inflation rate of between 16 and 18%. To combat the double-digit inflation rates, interest rates were raised very sharply by RBI, which forced us to look at other avenues of funding. To incentivize customers to invest in our deposits, we introduced an across-the-counter deposit receipt program, which ensured that HDFC was able to raise funds in a very challenging environment. We were the first financial institutions to initiate such a step, as during that time, issuance of receipts would sometimes take up to 2 months. So we introduced a process of giving across-the-counter deposit receipts. The across-the-counter deposit receipt provided great comfort to depositors and reiterated a strong commitment to customer service. The second example I would like to address is the recent pandemic, which had a devastating effect on all of us. I personally had never imagined in my wildest dreams that a health crisis and not a financial crisis would be a cause of such huge economic catastrophe all over the world. Moreover, the sheer scale and speed of the unfolding human tragedy was overwhelming. The pandemic affected the global economy by causing both aggregate supply and demand shocks. The rumblings of the pandemic began in December 2019 or thereabouts, and that is at least when we first really heard about it. But like other pandemics or like other epidemics in recent memory, it was thought that the spread would be limited and a cure would be found very soon. However, by March of 2020, it was clear that this virus was different from other viruses, as the transmission was a lot faster and it transmitted through carriers who showed no symptoms at all. At HDFC, when we realized the magnitude of the crisis, we had to act immediately and take some sound decisions. It was important for all of us to act calmly amidst the initial chaos. For instance, during the national lockdown, an area which we started to focus on intently due to COVID-19 was digitization. In fact, in the housing finance space, we were the first ones to lay emphasis on online processing during the lockdown. More specifically, we focused on an online digital platform for loans and retail deposits and launched virtual offices for customer services. Our digitization objective was to transform the customer's journey across the life cycle to improve the customer's overall experience in taking a housing loan. To ensure smooth operations, we conducted a series of training workshops for our channel partners so that they could seamlessly use the digital platform to facilitate real-time tracking and processing of loan applications. And this digital investment has proved to be very fruitful. We are continuing to see the trend of digital onboarding, particularly with salaried employees. During financial year 2022, 91% of the new loan applications we received were through the digital mode. Senior management was in constant touch with the board regarding the steps that we were taking to handle the COVID-19 crisis and how we were managing our current and long-term risks. Of course, attaining operational efficiencies in the new working style environment and the health and safety of employees always remained a priority. A combination of faster than expected economic recovery, our thrust on digital initiatives and the inherent demand for housing began to bear fruit as the lockdown measures began to ease. We more than made a full recovery on individual housing loan disbursements from the month of September 2020 itself. In fact, earlier there was a general consensus that the recovery would be gradual, but in actual practice, the recovery was much faster than expected. At HDFC, our year-to-date retail disbursements not only continued to improve month on month since the lockdown, but more importantly, from September 20 onwards, there was a consistent growth compared to the same month in the previous year when there was no impact of COVID. In fact, for the fourth quarter of financial year 2021, which is the quarter ended March 2021, we saw 60% growth in individual disbursements. I cannot remember a full quarter in HDFC's history when we saw a growth of over 60%, 60. Due to the devastating second wave last year, disbursements were temporarily affected from the second week of April 2021 till around the middle of May 2021. Positively, once the COVID-19 cases began to abate and the localized curves began to ease, disbursements picked up very sharply once again from the second half of May 2021. The third wave in January 2022 saw a rise in infections, but with lesser severity, and the disruption was very, very minimal. Consequently, we had a strong growth during the quarter ended March 2022. The pandemic reiterated our belief and conviction that being prudent, adhering to strong governance practices, and focusing on long-term growth is critical for any organization to sustain. Numerous organizations have fallen off the cliff in their relentless pursuit of market share with a blatant disregard of the inherent risks. Black swan events will happen, but that does not mean we must not be prepared for unanticipated events. The crisis came as a reality shock for many organizations across the world. One must never lose sight of risk and crisis management, and it must remain a priority for every organization. We have been able to overcome challenges and volatility through a proper mix of conservatism, prudence, and dynamism, while always keeping our core values intact. Let me now come to the second part of my talk. While I was composing my thoughts for this address, I wondered what it was that I could share with you. After some deliberation, I thought I would like to use this opportunity to share with you certain guiding principles that I picked up in my working career. When I was putting my thoughts together, I could think of 18 such lessons that I've learned. Each one of us goes through the cycle of success and hardship. As we have seen from COVID-19, a crisis can come from unforeseen sources. It is important to learn from extreme difficulties and emerge as a stronger person. My advice would be as follows. First, be alert for the first signs of change. Change descends on everyone equally. It is just that some realize it faster. Some changes are sudden, but many others are gradual. While sudden changes get attention because they are dramatic, it is the gradual changes that get ignored till it is too late. Many of you would have heard of the story of the frog in boiling water. If the temperature of the water is suddenly increased, the frog realizes it and jumps out of the water. But if the temperature is increased very, very slowly, 1 degree at a time, the frog does not realize it till it boils to death. In your professional life, you will realize that it is critical to be alert for changes in the external environment, which could lead to your skills or your businesses becoming obsolete. Technological changes, for example, have proved to be disruptive for many businesses. You must develop your own early warning signs, which alerts you to the changes and calls your attention to it. Secondly, I would say anticipate change even when things are going right. Most people wait for something to go wrong before they think of change. It is like going to a doctor for a checkup when you are seriously sick, or thinking of maintaining your vehicle only when it breaks down. The biggest enemy of future success is past success. When you succeed, you feel that you must be doing everything right for it to happen. But when the operating environment changes, doing the same thing may or may not continue to lead to success. Guard against complacency all the time. Complacency makes you blind to the early signals from the environment that something is going wrong, something is changing, something is going wrong. There is a tendency to feel that if a particular strategy has worked in the past, then why should it not work in the future? You must always remember that works very well today may not work 5 years later. Thirdly, do not allow your routine to become an addiction. For many of us, the routine that we are accustomed to obstructs our ability to respond to a changed environment. There is a sense of predictability and therefore comfort in doing something the way we have always been used to. While routines are useful, do not let them enslave you. Deliberately try and break out of them from time to time. Fourthly, you must realize that fear of the unknown is very natural. With change comes a feeling of insecurity. With change comes a feeling of uneasiness. Many people believe that brave people are not afflicted by this malady. The truth is different. Everyone fears the fear of the unknown. Courage is not the absence of fear, but the ability to manage fear without getting paralyzed. Feel the fear within you, but move on regardless. Fifth, I would say, is keep reinventing yourself. This will prepare you to anticipate change and be ready for it when it comes. Constantly keep asking yourself what new skills and what new competencies will be needed in your area of work or in your area of specialization. Begin working on these skills before it becomes inevitable for you to do so. This way, you will have a natural advantage over other competitors. Never ever stop learning. You are never too old to learn something new. Formal education is just the beginning, and it is only the first step in this journey of learning. In the world of tomorrow, only those individuals and organizations will succeed who have mastered the art of rapid and ongoing learning. Sixth, I would say, is surround yourself with people who are open to change. If you are always in the company of cynics, you will soon find yourself becoming like them. A cynic knows all the reasons why something cannot be done. Instead, spend time with people who have a can-do approach. Choose your advisors and mentors carefully. 7, play to win. I've said this many times in the past. Playing to win is not the same as cutting corners. When you play to win, you stretch yourself to your maximum and use your potential to its complete full. It also helps you to concentrate your energy on what you can influence instead of getting bogged down and worried about what you cannot change. Do your best and leave the rest to the Almighty. 8, respect yourself. The world will respect you or will reward you on your successes. Success requires no explanation, and failure permits them. But you need to respect yourself enough so that your self-confidence remains intact, whether you succeed or not. If you succeed 90% of the times, you are doing fine. But if you are succeeding all the time, you should ask yourself whether you are taking enough risks. If you do not take enough risks, you may be losing out on many opportunities. 9, there will be times when things will not happen the way you would like them to, both in your personal and in your professional lives. Your self-confidence, which emerges from a positive attitude, will be crucial to ensure that you stay in control of unexpected situations. Do not get disheartened by temporary failures. Temporary failures will come to everyone. Do not accept failures in life easily. Pursue your interests with wholehearted commitment, but do not be disheartened if you make mistakes, for that is the only way that you will learn. Deliberately pursue activities in which you have previously shown little or no aptitude, or where you have been a failure. The way out of fear of failure is to face it head-on with perseverance, rather than to be embarrassed or intimidated. I have always believed that failures are part of the journey towards ultimate success. You should quickly analyze the reasons why you failed, learn the lesson, and do not commit the same mistake again. 10, always strive for excellence. There is a vast difference between being good and being excellent. Excellence by itself is a moving target, and no one has to, and you therefore have to constantly keep raising the bar. Keep striving to excel in whatever it is that you are doing. 11, and I think this is very important, you must be a good team player. It isn't always possible to run the whole mile alone. Remember that being able to get along and work with other people is a great asset in the real world. People around you are important and nothing can happen without them. Stay humble, but believe in yourself. 12, you must remember that there are no shortcuts to long-term success. Do not get attracted by the false lure of greed. Success is attained by single-minded devotion and sustained hard work over long periods of time, during which your core values must be unshakable. The pressure on performance is immense, with increased competition and peer pressure. One must resist temptations of short-termism if one is looking at long-term goals. A short-term approach may result in instant achievement, but it will be fickle and short-lived. A long-term approach will eventually lead to success in the long term, which is sustainable and fulfilling. 13 is when you plan your career, you must have clear and well-defined goals. Just aiming for titles, recognition, and fame alone will not give you professional success or satisfaction. Be clear about your goals and then pursue them with wholehearted commitment and perseverance. 14, in your professional life, or for that matter in business, there are often various options to choose from. Do not prejudge, but have an open mind, assess and weigh all options carefully before making a conscious choice. 15, once you know what you like to do best, aspire to excel in your field of excellence or in your field of interest. Once you choose your path, be committed and be passionate about it. This dedication will help you achieve your goal and motivate those who are close to you. For instance, I was fascinated with finance myself and loved numbers from a very early stage and charted my career path around this passion. 16, having grit or perseverance over the long term is critical. Many a time, persistency means sticking it out and keeping on pursuing. Success isn't a one-way path or a straight line. It is a muddled road with various ups and downs, and you might fall or get lost in the way. However, if you keep going, you will eventually reach your destination. As the great boxing champion Muhammad Ali had said, I hated every minute of training, but I said to myself that don't quit, suffer now, and live the rest of your life as a champion. 17, and probably the most important learning in my life, is never to compromise on principles or on your core values. Honesty, integrity, and transparency are time-tested traits that will never fail. Integrity is one such value. Long-term success can only come through adhering to the highest possible level of integrity and ethical standards. The very fabric of a society or an organization and the trust in which it is held revolves around the level of integrity and ethics that it stands for and is known for. It is not difficult to achieve this reality. I can never forget John Kennedy's words. He had said, compromise, by all means compromise, but only on issues, never ever on principles. There is no pillow as soft as a clear conscience. Values like honesty, integrity, consideration, humility have survived for generations. At the end of the day, values are what define a person more than his achievements. Lastly, and a very important principle that I want to leave with you, is that irrespective of what success you achieve in your career or business, you must always remain humble. More importantly, you must be humane, accessible, and approachable to people, no matter how small or unimportant they are. Sometimes when you achieve a lot of success in life, you really start wondering whether you deserve it. That brings me to the value of gratitude. We have so much to be grateful for. Our parents, our teachers, our professors, our seniors have done so much for us that we can never repay them. Enjoy your family, friends, and well-wishers before they are gone. Money, power, fame, none of that can replace your family and friends or bring them back once they are no more. Finally, I wish each and every one of you lots of success and the very best in life. I'm confident that you will have a successful and cherished career. It has truly been a privilege to talk to all of you. Thank you very much.
Simply wonderful, sir. I can say that the way in which you describe this second part of your speech is mesmerizing, and we all respect it, sir. And meantime, sir, I just want to share that my chairman of Board of Governor, Mr. Sasikiran Shetty ji, had just conveyed his regards to you. And he said that it's so nice that you all have invited Mr. Keki Mistry at our platform. Before this, any QA, sir, I just wanted to interfere and say this to you. Thank you very much, sir. Okay.
Okay. Good afternoon, sir, Mr. Sir and Honorable Director, and respected colleagues, and my dear friends here. It is really a great honor to listen to you, as well as to getting an opportunity to moderate this particular session. When I just sitting at the position, when I just got out of a strategic management class, where how a business strategy is evolved and what exactly the role of a strategic leader in an organization. How you have listed the challenges faced by a particular leader in an organization, and also those success mantras to be followed by a manager to be a successful leader is something which is very insightful, and I'm sure that our students might have got quite a lot of learning out of it. And at the same time, with all this, I'm sure that there are quite a lot of questions also coming in their minds. So with your kind permission, may I ask some questions to clarify certain things which will add value to the learning which our students can take, particularly those who are going to start their career in, say, 2-3 months' time, because the placement season is going to come and they are going to enter into their career. Let me start with some of the points which you have raised in the thing, particularly, say, 14 to 16, where you have clearly mentioned about when you are choosing something, we have to look at all the options. Once you choose that, you have to stick to that and dedicate it with a pertinent or persistence way to do that. In your, say, starting off your career, you might have also faced the same kind of challenge which our students are going to face. The thing, where will you start? What exactly the job which they will be choosing? You might have also chosen something, as you have mentioned, about 41 years back when you decided to join HDFC. It was relatively a young company where you might have got some opportunity from a very well-established multinational company. What might have guided you to choose that particular company and then dedicated to the development of the company, and then became the most accomplished business, one of the most accomplished business leader in the country itself? So your guidance will be really valuable for our students. Can you please share something on this, sir?
So I finished my chartered accountancy and I was working with Indian hotels for some time, for about 2 years or so. And they wanted me to go to Goa as the chief accountant. This was way back in 1981. And I did not want to leave Mumbai because my mother was with me and she was not keeping too well. So I said I have to stay on in Mumbai. And in Mumbai, Indian hotels did not offer too much of opportunity in those days. So at that time, 3 job offers came to me. One was from a large bank, Citibank, I can mention the name. One was from a multinational company, and one was from HDFC. I went through all the 3 interviews, and clearly I got the feeling that in the multinational company and in Citibank, the opportunity, whilst the stature might be higher, the salary might be higher, and so on and so forth, it would never give me the scope, the ability to do what I want, because it was never going to be a very challenging thing. I would be just one out of hundreds of thousands of people within that organization, and I would have really no role to play. So I chose HDFC, which in those days was a very young organization. And I must say that I have never looked back over the years. In that period of time, there have been offers that have come, there have been People who have come and approached and said, look at this, look at that. This gives you a short-term 40% increase in income, 50% increase in income, and so on and so forth. And I said, no, I don't want to do that. I want to look at the long term. Satisfaction, job satisfaction is the single most important thing that you should look at when you choose your career. And job satisfaction comes from the feeling where when you come to a Friday evening, you start sort of not regretting, but you start thinking that, look, let me look forward to Monday again. And on Sunday evening, you should not be feeling depressed. You should be feeling happy that the next day you're going to, start the week again. So that's the kind of feeling that you must have when you take up a job. And it is something which will come. You must challenge yourself. You must take up a job which offers those challenges and not just take up a job in a very established company in a sort of a side role. So I think that's the philosophy, that was the thinking 41 years ago. And I must say it has been an extremely rewarding experience being here for so many years.
Thank you very much, sir. That's really insightful, because people are behind most of the times with the pecuniary benefit. When you're looking at the non-pecuniary and the learning experience, that will be much more valuable. In the same context, let me ask another one as an extension of it. We are dealing with the dominance of millennials and Gen Z population, which is one of the basic trait of this generation is they don't have patience. They want to say, suppose if they are starting an enterprise, they want to be the unicorn in the next day. That's the kind of problem which we are facing. When you talked in your speech about the value to be looked at from a long-term perspective, what is your idea?
I would
particular thing.
Sure. Yeah. So I would say that in anything that you pursue, in any strategy, whether it is personal or business, you should always look at the long term. Don't look at the short term. Short term success is very short-lived. I'll give you a couple of examples. I'll give you the example of how you can maximize your profitability. If you are in the lending business, let's say you're a non-banking finance company in India in that 2015, 16, 17 period. Interest rates were low. We had a pretty steep yield curve. So you saw that many NBFCs chose to borrow short-term money. They chose to borrow money for 3 months, 6 months to what is commonly used as a paper called commercial paper, where the subscribers in those days were largely the mutual funds and also the banks. So because you were borrowing short-term money, your funding cost was very low. And because you were giving long-term loans, whether you were giving car loans or consumer loans or housing loans or whatever it was, the period was generally long. So because you lent long and borrowed short, you were able to achieve a very nice spread because your borrowing cost was low, your lending rates were high. But this thesis was on the expectation that interest rates would always remain like this. That is completely wrong. Interest rates will go up and down. So in 2018, we started seeing the first rumbling of interest rates going up in the early part of the year. Oil prices went up and a variety of things happened. Interest rates went up. And then you had the crisis in India where the ILFS defaulted in September of 2018. And then all panic broke in the financial sector. And there was a huge amount of risk averseness which set in. Now, all these non-banking finance companies which had borrowed short-term money and lent long-term money and made huge profits, shown huge growth, attained very high valuations in the stock market, all of these, or many of these NBFCs started facing a real crisis of survival. Because then it was a question of replacing their short-term liabilities. Every time the liability matured, it was not getting renewed the way it was being done in the past. So you had to necessarily go and borrow long-term money to be able to give long-term funding, which is where a risk factor comes in. You have to manage your risks very, very carefully. And a long-term approach always helps. Never look at the short term. The short term will get you immediate benefit, immediate growth, immediate valuation, if you wish, in a market, but it will never lead to long-term success. Your long-term success can only come through sustained hard work, sustained effort over a very longish time frame. And this is something that people will learn. The initial euphoria of doing something quickly, earning fame, making money quickly, at some point will go away in life, and you will want to look at the long term. And I would always recommend that you look at the long term, don't look at the short term.
Thank you very much. That's really, again, another insightful answer, which will keep together with whatever you have talked about, the keeping the positive attitude and the human and compassion of a strategic leader to keep their employees at a happy level. In this context, I also asked about another thing. When you talked about a continuous learning process, because you should never stop learning. This is the time of technological upgradation. And you have mentioned about, even in the case of the organization, how they have gained out of the adoption of digital technology. This is the time of artificial intelligence, the time of central bank digital currencies, cryptocurrencies, NFTs are coming in. What exactly your advice to this budding manager who want to get into this banking and financial service sector? What exactly the change which this technology which may bring into this particular sector? What is your opinion on this, sir?
All right. So technology is something which has changed over the years and will continue to change. What you are seeing today will be different 5 years later, and will be different. What you see 5 years later will be different 10 years later. So you have to have adaptability. You have to adapt to new technology. You have to adapt to new systems, keeping your core values in mind, keeping in mind your core objectives. So today, for example, many of the things which are available, artificial intelligence, for example, it helps you assess credit risk. It helps you assess potential risks in a customer. It helps you in being able to source business better. So these are the tools which have come in over the years, which have to be used to facilitate your core business. Your core business model has to remain intact, but you have to keep innovating, keep changing the way you're doing things, because the world is changing, technology is changing, and if you don't adopt that technology, you will be left out. Digitization is another classic example. If you are not able to process loans online, like we did during the lockdown period, the pandemic in 2020, we would have had no business at all during this period. But fortunately, we were able to move to digitization at a very, very, very early stage. And that helped us speed through this crisis. So things will keep changing, innovations will keep happening, technology will keep changing, and you have, as a leader, to be on top of that technology all the time. You have to be knowing what is happening in the market, understanding what is happening in the market, trying to adapt some of those things into your business to facilitate your business processes, whether it is in terms of getting more business, whether it is in terms of servicing or serving your customers better, whether it is in terms of reducing your costs, improving your efficiency, whatever it be. So the process of education never ends. Formal education is a relatively small part. Subsequently, the education that you need, the reading that you need to do is phenomenal.
Thank you very much, sir. This is all quite a lot of enlightening. I have a list of questions lined up, but I am sorry, I may have to stop here because it will be really inappropriate if I keep on extending. I think you have talked, it really made even humbled me about listening to you and the kind of journey which you have taken and how you have reached to this accomplished leader. Thank you very much, sir. I'm signing off and over to Vedant to take the process further.
Thank you, sir. Thank you, sir. Thank you, Bilal, sir, for moderating the session. And thank you, sir, once again for answering our questions. It was a wonderful and enriching experience listening to you. You beautifully summed up the relationship between an employee and the customer in a wonderful thought that only a happy customer can make only a happy employee can make a happy customer. The 18 lessons you shared will definitely remain with us. We are privileged to listen to your words of wisdom, and I'm sure that all the students are very grateful for the same. I now request our respected Dean of Student Affairs, Professor Rauf Iqbal sir, to share his thoughts.
Thank you, Honorable Chief Guest, Mr. Keki Mistry sir, respected Director sir, Professor Manoj Kumar Tiwari, Deans, my faculty colleagues, officers, and dear students. On behalf of NITIE Mumbai, I would like to express my sincere gratitude to Mr. Keki Mistry for this wonderful session today. It was very enriching to hear from you, sir, today. And we are indeed honored to have you on NITIE platform. Thank you so much for accepting our invitation and sparing your precious time for this session today and enlighten us with your knowledge. It's a great pleasure for all of us to get insights and advice from a business luminary like you, sir. We are all proud to see you at NITIE, sir. I'm sure that students are able to learn a lot from your vast experience and advice as a leader. Once again, I thank you, sir. It was really wonderful listening to you. And I wish sometime in future also we'll be able to welcome you physically at NITIE. So thank you so much, sir.
Thank you.
Thank you so much, sir.
Thank you very much.
Yes, sir.
And once again, let me wish all your students the very best in the years ahead.
On behalf of the entire NITIE fraternity, I would like to thank Mr. Keki Mistry, sir, once again for sparing his valuable time to address our students and faculty. I would also like to thank our director, Professor Manoj K. Tiwari, sir, and the Dean of Student Affairs, Professor Rauf Iqbal, sir, for their continuous efforts to facilitate an excellent learning environment for the students, and Professor Benil Kumar, sir, for seamlessly moderating the session. I thank everyone for attending the leadership talk. This event was coordinated by NITIE Prerana Management Group, a student committee of NITIE. I now request all the participating members to kindly switch on their cameras for a virtual photograph with our guest of honor. With your permission, sir. Ashish, please let us know once the photograph is taken. The photograph is taken. We would now stop the live stream on YouTube. However, I request Mr. Keki Mistry, sir, to spare us 5 more minutes before we officially close the session. Ashish, please confirm once